moving to the methods of electronic fund transfer. The first one is RTGS, or real-time gross settlement system. As the name suggests, the system uses the real-time basis, and also it is done on a gross basis. This RTGS system came into operation on 20th March 2004. Then the features of RTGS, that is, as I said, it is done on real time and gross basis. Then normally RTGS system is used for large value transaction, that is, the minimum transaction limit is 2 lakh and there is no restriction on the maximum amount. The bank need not have a core banking facility in order to avail this RTGS system. Then the remitting bank receives a message from RBI that the money remitted has been credited to the account of the receiving bank. Then RTGS transactions are available from 9 AM to 4 PM on weekdays for the customers, and on weekends from 9 AM to 12 noon on Saturdays. So this is available for customers from 9 AM to 4 PM. Whereas between banks, if the RTGS transfer is to be done between banks, then you can that can be done from 9 AM to 5:30 PM on weekdays and 9 AM to 2 PM on Saturdays. You will have a charge for RTGS transaction which will range from ₹5 to ₹50, that amount plus GST. Depending on the amount of transaction, the charge will be levied from you. Then the next one is NEFT, that is National Electronic Fund Transfer. Now NEFT came into being on October 2005. NEFT uses public key infrastructure or PKI technology to ensure end-to-end security, and it rides on Indian financial network to connect the bank branches for electronic transfer of fund. Now, for being part of this NEFT, the bank should be NEFT enabled. Also, there is no limit for transfer of funds through NEFT. That is, any amount of fund can be transferred using NEFT. And this NEFT works on net settlement basis and deferred basis, which we already discussed in the previous video. And so in NEFT, you will have 11 settlement cycles between 9 AM and 7 PM on weekdays, and 5 settlement cycles between 9 AM and 1 PM on Saturday. And any customer can remit funds using NEFT if he goes to a bank. That is, say if I do not have any bank account, still I can transfer funds to another person, or I can remit funds to another person's account using NEFT. That is, I can go to any NEFT enabled branch and I can give all my details. I need to fill in a form giving all my details, my name, my address and my PAN number and everything, and then I can transfer the funds to another person by giving his account. But the only condition is the beneficiary need to have an account. Now, what happens in NEFT is discussed here. That is, at first, any individual, a firm or a corporate intending to originate transfer of funds through NEFT, he will have to fill in a form by providing the details of the beneficiary, like the name of the beneficiary, the name of the bank branch where the beneficiary has the account, then the IFSC code of the bank branch, and all such details has to be filled in. Then the remitter authorizes his or her bank branch to debit his account and remit the specified amount to the beneficiary. The customers enjoying net banking facility offered their banker can initiate the fund transfer request online. Some banks offer NEFT facility even through ATMs. Okay, so when the bank gets this order to transfer fund, the originating bank branch prepares a message and sends this message to the pooling center, that is also called the NEFT service center. Then the pooling center will forward the message to the NEFT clearing center, which is operated by the National Clearing Cell of RBI. And they will send a message saying that this amount or this transaction is to be included in the next available batch. Then when this clearing cell or the clearing center receives this message, what they do is they sort the fund transfer transaction destination bank wise and prepare accounting entries to receive funds from originating bank and give funds to the destination bank. Then thereafter the bank wise remittance message are forwarded to the destination bank through their pooling center. After this, the destination bank receive the inward remittance message from the clearing center and pass on the credit to the beneficiary's account. This is the process of NEFT. Now we already saw what NEFT is and what RTGS is. Now we can easily say the difference between NEFT and RTGS is there in its name itself. That is, in NEFT it is done on a net basis, that is you will have slots and also deferred payments, and for RTGS it is done on a real-time basis and also on gross basis. These are the main difference between RTGS and NEFT. Then moving to the next one, that is ECS or electronic clearing service. Electronic clearing service is a mode of electronic fund transfer for transferring funds from one bank account to another bank account again. But normally this ECS is done for bulk transactions. That is, suppose if an employer wishes to pay all his employees on the salary on 1st of every month, then he can give an instruction, which is ECS, electronic clearing service, to debit the amount from his account and credit the same in all his employees' accounts. So it is a bulk transfer, right? So here what happens is there is a number of transactions that is taking place at the very same moment. Such kind of transactions are done through electronic clearing services. Now we have ECS credit and ECS debit. ECS credit means suppose if our college wishes to pay all his employees or all the teachers on every month, the say 5th of every month we get our salary. So here our college can give an instruction to its bank saying that we need to pay all our employees on 5th of every month. So this instruction is given and that becomes an ECS credit. So ECS credit is normally used for paying of interest, then paying dividends to shareholders, paying of salaries, paying on pensions and all these things. And we also have ECS debit, that is in this we are taking the amount, that is suppose if our college wishes to take or deduct tax from everyone's account, then we need an ECS debit. Okay, so normally ECS debit is done for loan installments. Suppose if you have a bank loan or if you have an auto loan, then EMI will be deducted from your account every month, right? So all these transactions are done through ECS debits.